Yes, hello everyone. Welcome back to my YouTube channel. And in this video, we're going to be going through a topic that's not talked about too much. Especially in the previous videos that I've always done. I've always focused on order blocks. Now, with that, you're going to see in the market that there's many times where your entries might not actually hit that order block, and rather it just, flies off. I remember in the beginning of my journey when I was learning about smart money concepts and applying it all. One thing that I found very difficult is the whole idea of missing trades. Of course, in the beginning, where my mindset, I was still adapting to everything and still learning a lot. At that time, I was still learning. So, of course, what I tend to do is, fall into traps like fear of missing out and, etc., etc. My setups would come, they'd miss out slightly, and then I'll try to get in, even though it doesn't fit my plan. Now, one thing we're going to talk about here is what happens when your entry is missed, but price still goes, in the intended direction. Many times this does happen. I've got so many times where I've even sent out analysis into my group, and we might be missing it by a fraction of a hair or something, and then eventually it just completely drops and goes down into our intended direction. Now I'm going to give you one example that we're literally in a live trade in at the moment. So we're looking at GBP JPY. I'm going to zoom out on the high time frames just to give you an overall picture, but just to let you know, this was the area that we were looking at this morning. So this area right here, I'm going to show you exactly how I got to the analysis and then what we're going to do about it. So let's just zoom out on the 1 hour time frame. Okay, cool. So as you can see, with all of this at the moment, in the long term, obviously we always do like to zoom out. In the long term, GBP JPY is moving a bit bearish, but sort of in the medium term, we're kind of stuck within this range. Now, when we focus on the range that we're within at the moment, it seems that we're just about to break some of the structure downwards. As you can see, for example, we were making higher highs, higher lows. We haven't broken the higher high at the top. So I have reason to believe that we can continue to sell up until a certain point at least. Now, just to quickly explain from the beginning. So higher high, higher low. This created a lower high, so it never broke past this, right? So from that point onwards, I can start to think, okay, we can still start to look for sells. As soon as more structure was broken to the downside, so as you can see on this internal structure, this important primary structural point was broken. As you can see, once it was broken, that's when I was convinced that we could start to look for more sells. Now, zooming into the lower time frames, let's just go down to the 30-minute, for example. Okay, cool. So when we're talking about this trade, a lot of it, I do have a few other confirmations that I do teach into the group and the course and mentorship, but just a few simple ones that I can definitely show you guys. Is this one right here, timing. So what happened is we got this Asian range that started to form, and then eventually what I was looking for was some kind of London fake move to the upside, eventually to get us into more sells. Because of course, with that high time frame market structure, we're looking bearish, and that's exactly the reason why I'm still looking for sells. But in terms of the entries, what we were originally looking at is right here. So we had an initial, so from this order block right here, we had an initial mitigation of that previous one. Let me just get rid of this. And then eventually the order block that I was looking at was this one right here. Marked it out last night, just before all of this happened. That's pretty much the sell area that we were looking for. But here's the problem. What price actually did was all it simply did was induced past this high. So what I mean by induced, it took the liquidity of that high and then it reversed downwards. But during that reversal, it only went into the imbalance. Now you're going to see this at times in the market where it doesn't actually hit the order block, but rather it rejects the imbalance and then moves down. Now, of course, with smart money concepts, one of the preferred ways to actually enter is just off the order block, right? So what we would have been waiting for was this, exactly as I had it marked out. So price to do that London fake move to the upside and then eventually to sell off throughout the whole day. No, that's not happened. Eventually price just moved into the imbalance. And this is something that I do want to talk about. There's going to be many times in the market when you might be, so let's just say, for example, we're moving bullish, whatever it is. So let's just say, for example, we had an order block right here. We had an order block right there, and then an imbalance just above. And then let's just say, for example, there was, I don't know, something else there. What you're going to see is at times where, everything is set up nicely. Timing is perfect. The way the trade is actually setting up, market structure is perfect. Liquidity, we've induced some kind of liquidity. That's perfect as well. But it just doesn't reach the order block. One suggestion that I do want to give to you guys is this. Just because it hasn't hit that order block, but every other confirmation is in line, understand this, that once we get, this is why timing is so important as well. Because we know the characteristic of London session is that generally it will create some kind of consolidation within Asian range, and then London session will typically sort of, manipulate around them areas. Now, from that, if we see that during London session, we've created a fake move down, it started to break up slightly, but we're moving outside of this London session now, and we're expecting an expansion for the rest of the day, you can expect that price will keep on moving upwards or downwards, depending on which side of the market we're looking at. But the main point here is if every confirmation is in line and you expect that the expansion is going to happen, especially because of timing, there's no reason, or of course there is, but there's more of a reason now to, accept that price is just mitigating off that area and then moving upwards. So then, of course, that's when we can start to look for buys. For example, it could be on the lower time frame, or it could be something like this. So it just breaks some kind of lower time frame structure upwards, and then let's just say we aim for the high, something like that. And that's pretty much epitomized in this trade right here. In this GJ sell that we got in this morning. That was the main area that I was looking for. As soon as I got a few confirmations, got into the trade. So I started off like this, of course, stop loss a bit higher than the top of the range. And then eventually, now we've moved to break even and we've taken some profits here, even at the lows as well we're reaching right now. But yeah, all of this was sent into the private Discord group as well. Of course, this is where I'm sort of in daily explaining pretty much all of my personal analysis. So whenever I do have something that's coming up, on a weekly basis, I always do send in my analysis to the group and then watching them areas throughout the week. And then in this section, pretty much just send in my entries. But yeah, guys, just a quick little lesson about all of this. Knowing when to enter and when to not enter has been something that is definitely a skill I've grown and developed throughout time. Of course, this was something where, before it would affect my psychology in a way. I would think, oh, why is it just hit? Or why is it not hit by a few pips and completely gone down my direction? Now, as you mature as a trader, you start to understand that these things are going to happen, but it's about what we do after it does happen. What's the action we're going to take? Yes, of course, this isn't going to be, the risk to reward, for example, on this trade is not as high as what I'm usually used to, a 1 to 5 or a 1 to 10 or something. Whereas what I was expecting before could have been something like this. What's that? A 1 to 7. Instead, pretty much a 1 to 3. But you know what? At the end of the day, one thing you got to learn, profit's profit. Whatever pips you can bag in, whatever risk to reward you can bag in, it's always good in the long term. So yeah, guys, apart from that, that's going to be it for this video. So take care and I'll see you all in the next one.